Hey everybody, so I know it's been a little while since I did another video update, and I wanted to go ahead and knock it out here and take care of basically from August 1st through the 16th of October, which would be the second week of October. So before we do that though, let's look at the disclaimer. Alright, so as you know, trading futures does involve substantial risk of loss. It's not appropriate for all investors, and feel free to just pause the screen and you can read over this disclaimer. My company, though, is not a CTA. We're a third-party developer. We offer the algorithms under what's called a letter of direction. So again, keep in mind that past performance is not indicative of future performance, and there is substantial risk of loss in futures. It's just not for everyone. So let's go ahead and look at how we did, though, in the last few months. Okay, so I'm going to start by just talking about the day trade Phoenix, and we're going to look at basically the results that it saw in the last few months. So that's from August, the 1st of August to the 16th of October. Now remember that in the Phoenix algorithm, the algorithm trades three individual algos. The first one is called this day trade Phoenix, and it is a day trade algorithm that places trades on the S&P. And so let's go ahead and look though and see how it did though. What you're looking at here, by the way, is just an attempt that I made to try to capture the feel for the trades that it had. So this is going all the way back to the 1st of August, which is over here on the left, all the way through the 18th of October, or basically the Friday that ends that week in October. And so as you can see, I mean, this algorithm did have probably about 15 trades, but let's go ahead and look at the chart and I'll go through some of the main ones that we had. Okay, so here's a chart of the S&P E-mini with the day trade algorithm added to it. Now I'll go ahead and go and kind of scroll back over here so that we can see the beginning of August. And what you're looking at here, this is basically July. And so we have to go over a bit more to get to August. Okay, this is pretty close to the start of August, but let me go back a little bit more. There we go. So here's the 3rd of August, but you know, in essence, this algorithm did have a trade on the 2nd of August, and that's this trade right here. And it got stopped out of that trade. So that was a stop out that we had. Then it had this break-even trade on the 6th of August. And then over here on the 11th of August, it had a slight loss for a trade. Basically break-even though, for the most part on that one. And then if we keep going over, it had a winning trade on the 23rd of August, which is this one right here. Very nice winning trade. And then if we keep going over, there's another winner. And then here's a losing trade. So up until now, for the most part for August, it had a handful of trades, a couple winners, a couple losers. But if we look at the start of September, I know this algorithm struggled initially, and it had a losing trade here, another loser here, and then a loser here. But by the way, this is all normal. There's no, you know, as the market's rolling over like it did throughout September, it is relatively normal for this algorithm to still trigger trades. A lot of times it'll be short covering rallies though, and it'll actually have really nice gains. But in these cases, it just took the losses. But then it finally had a winning trade right here on the 23rd. And then you'll see that things really started to kind of change. And on the 5th of October, we had a really nice trade right here. On the 7th of October, a small loss right here. But then we had a really big trade, really good one on the 14th and then also on the 15th. So when you put it all together, you know, this algorithm actually did pretty good. And we'll take a look at the stats so you can see what I mean. Okay, so this is the SIM report. In other words, from the SIM account, this is the report of how it did. And you can see that in August, it actually did decent. It was up $868. It had 5 trades with a 60% win rate. So it had 2 losers and 3 winners. And then in September, it really did struggle. It took a loss of about 2,389, and that was on 4 trades. So about 3 losers and 1 winner. But then in October, as this shows, things really turned around. So if you look at the last 3 months, this algorithm actually has done pretty good. It's been positive. And so for that reason, and because the market for the most part has traded sideways since basically from the beginning of August until the 16th of October, or 15th of October, since the market really has gone sideways and we outperformed in that scenario. And so I did give it an A. I would say that this day trade algorithm did really good actually. In October, it's the main reason why we're actually up quite a bit in October right now is really from this algorithm. Now in September though, it got hit. And so I know for some of the people that are watching that might be on the swing trader or the wave trader, the swing trader, wave trader does not trade these, and that would be legacy customers, by the way. But so you did miss out on some gains in October, but you saved on some gains, some losses in September. So as you know, this is for the Phoenix algorithm, but I also like to try to mention at least how the legacy algorithms did as well. So let's go ahead and look at the 10-year note now. All right, so the 10-year note did get stopped out of a trade. And this is a trade that we've been in for quite a long time, but it did get stopped out on the 27th of September. And so as you can see, I mean, the 10-year pretty much has sold off in the last 2.5 months. Now, and so I gave it a D actually, because again, the S&P has gone sideways, and this algorithm usually will do pretty good in an S&P sideways moving kind of market. But in this case, it didn't really do that good. I mean, we got stopped out of a trade. Now the silver lining though is that it did not jump right back in. So a lot of times, part of the battle is knowing that we got stopped out, that the stop was correct, and that it didn't just jump right back in and get hit again. But fortunately that didn't happen. And so that's the silver lining, is that the 10-year has sold off additionally since we got stopped out, and we didn't take losses. And I can tell you, I mean, if the 10-year keeps going lower, then we'll for the most part be still on the sideline. The algorithm will automatically just sort of stay on the sideline. As the 10-year starts to kind of gain some traction or stability, I should say, then we will eventually get back into the 10-year. But for the 10-year, I mean, it didn't do that good. I mean, so I gave it a D plus. The reason why it's a D plus and not just a D is really because I wanted to give it a little bit of credit for getting out of the way as the market continued to sell off. So so I think that's enough on the 10-year. Let's kind of look at the next algo now, which would be the momentum S&P algorithm. And this, by the way, is kind of the summary as well of how everything did when you combine it all. So again, the Phoenix algorithm trades the day trade algorithm, which is this one here. It trades the 10-year note, the momentum 10-year. It also trades the momentum ES, and that's this algorithm here. And this is the one that usually has the most number of trades and the one that is the most active. But let's go ahead and look at the chart, and then we'll circle back at this, and we'll talk about the results from the 1st of August until the 16th of October. Okay, so what you're looking at here, this is just the momentum S&P algorithm. Now let me go ahead and scroll back a little bit so you can see the beginning of August. Now here's the beginning of August way back here, and you can see that as the S&P went higher, we had quite a few winning trades, and we actually started off August with some actually really good gains from this algo. But then what happened is, starting around the second week of August, the market sold off and we got hit with 3 stop outs as it rolled over. Then we jumped back in and had a few winning trades here and there, but then the market rolled over again. Now, as the market rolled over a second time, we actually did really good in this period, even though it might not be super obvious that we did, but I want to show you why I'm saying that. It's true that we got stopped out of a couple trades here, but then notice here we had a winner, and then we had another winner right here, and then the market sold off. And so even though the market was down, we were actually up on these 2 days. Then we got stopped out of a trade, but then we had another trade that we got in and then got out a couple days later with a gain, and then the market sold off. But then notice how right here we didn't buy again, and that's kind of the key part. So as the S&P rolled over, we had a few winning trades, a few losing trades, but then the market really sold off pretty strongly, and we didn't have any losses. We were just sort of on the sideline. And now remember too that even though we were on the sideline, the day trade algorithm was trading, and that's why again in October we've been up, is because that day trade, that first algo we looked at, had a few really nice winning trades. In fact, I think one of them was on this day, I believe. I think it was the first. It was either the first or it was one of these up days that you see here. But then we had 2 back-to-back winners on this day and then also on this day. So even though the market goes up, this algorithm didn't trigger, but the other one did. And so we took advantage of that pop. But the real thing I wanted to focus on is just how this algo did. And this is that swing trade kind of overnight S&P algorithm that we have. Now, if we look at the market as a whole in this period, for the most part, it was sideways. Now, if you look at kind of this point over here on the, I guess right here on the 2nd of August, which would have opened right here, the S&P for the most part, with the exception of these last 2 days, was pretty much break even. It's true that the market kind of went straight up and then down and then up and then down and then up, down and then up again. But for the most part, when it was all said and done, the market came pretty close to ending where it had started. So for the purpose of the analysis that I like to do, I would consider this a sideways market with a lot of volatility, which happens to be, again, one of the cases that this algorithm can tend to struggle a little bit more. So the fact that we got through it without any major damage is actually really good. And if we look at this sim report, you'll kind of see how it did, at least in the sim account. And what you'll see is that, kind of like I was suggesting, this algorithm was mostly break even. I mean, in August, it was down $270. September, it was up $164, which is really just break even. This is a 20K unit size. So, 1 or 2% is just not, I mean, it's just a very small amount for us. So that's how it did. Now, the other good thing is that in October, or towards the end of September, I should say, as the market continued selling off, we were just on the sideline. And so this algorithm has actually done pretty good, I would say. All right, and that leads us back to this slide where I'm kind of summarizing how these algos did, or how the Phoenix did when you combine everything together. So the grade I gave it was a C-. The reason why is because it is down. So normally I would give it a C in a case like this, or maybe even a C+. But the fact that we are down in this period, even with the spectacular October that we had, and the reason why we're down is really because of that 10-year trade that we were in. It's really that one trade that kind of caused the losses to really add up in August and then also in September. But it is part of the history, and so I'm not running from it or anything like that. I'm just to explain it. 2 of the algos did really good. The day trade did good. And then this momentum S&P did good, considering that it was in a really tough spot. But the fact that we didn't have bigger losses is actually pretty good. So I gave it a C-. I think that kind of sums up, though, the main things I wanted to cover. And again, this is as of the 18th of October. So October's not done yet. We could close up from these levels. We could close down. The other thing I'll say, though, quickly is that for this momentum S&P, even though we haven't had a trade in about a month on that algo, because of the rally that we saw, it is beginning to trade again. So it actually had a trade today that I'm not including in any of these analysis. But so the fact that we're starting to get back into trades now is a good thing, because hopefully the market continues to rally and stabilize, and we should take advantage of that as it goes higher. But I think that's all I had. So if you have any questions, feel free to email me at sales@AlgorithmicTrading.net. Reach out. I'd be happy to go over these results or answer any questions that you have. And I'm hoping to get back in the normal swing of things as it pertains to the reviews being done a little bit quicker. So yeah, thanks again for watching, though, and have a great day. All right, bye.